Is investing gambling? After all, you can lose all your money if you're dabbling in the stock market, and you can make a lot of money if you put all your money on red at the roulette table. So is there a difference between gambling and investing? Well, in this video, we'll find out. I'm Anthony and we're talking money. If you were to look at the definitions of those two words, investing and gambling, you'd find that gambling is taking a risky action in the hope of a desired result. And investing is defined as putting money into a financial scheme with the expectation of achieving a profit. There seems to be an awful lot of overlap in these definitions, so much so that they could be used interchangeably. Just looking for a definition in a dictionary just isn't very useful because instinctively you know there's a difference between investing and gambling. It's just useful to actually know what the difference is. After all, if we're gambling, the house always wins, right? The odds are stacked against us. So firstly, I think it's useful to look at the time frames involved. The shorter the time frame, the more likelihood it's going to fall into the gambling bracket. Whether it's a horse race that lasts a few minutes, the spin of a roulette wheel that lasts maybe a few seconds, or day trading that lasts seconds, minutes or hours, all these examples can be distinguished from what we think probably is investing, that in all likelihood would have timescales measured in months, years or even decades. So does this cover our difference just like that? Look at the timescales. But what if I gave you a scenario whereby you sold your house to spend the whole proceeds on a painting? You may not intend to sell that painting anytime soon, maybe in 5 years' time, but most people would consider that a huge gamble. There must be something else other than timeframes that lurched away from investing and into the gambling corner. In this example, there are two features. Firstly, the movement from low risk to high risk. Your house is probably very low risk, and banking on the rise of the value of a painting, a new business venture, or buying Pokemon cards or anything like that is relatively high risk. But the second aspect of this scenario is proportion. By that I mean, if you were to buy a painting for $5 or £5, then this would be considered a hobby purchase and it's unlikely to lose you or make you much in comparison. However, ploughing your life savings or the proceeds of your house into a painting, well, that's a totally different proposition. It may turn out to be the best decision you ever made, or alternatively, you could lose everything. Which leads me neatly onto my fourth distinction between gambling and investing, and that is jeopardy. If your gamble stroke investment has only two options of win or lose, or win a lot or lose a lot, where the jeopardy is great, then it falls almost certainly into the gambling definition. On the other hand, if you can control your jeopardy by limiting your loss while running the wins, then you're more likely to be looking at an investment. So I love making things fit into nice patterns. So if we have four elements to look at now, if we're going to define something as gambling or as an investment, we can conclude the following. For me, gambling contains some of the following: short timescales, movement from low risk to high risk, high proportion of total, and high jeopardy. So here's a nice simple algorithm. I love a good algorithm. If your purchase involves two or more of these aspects, then you're gambling. If it involves one or none, then you're investing. So given that, let's just see if it works in real life. If you're putting £100 on a horse in the Cheltenham Gold Cup, it's short term, movement from low risk to high risk, i.e. from safe cash to longer odds, and it's high jeopardy. You could easily lose your whole stake. And that's 3 out of the 4, so definitely a gamble. Okay, so how about spending on a pension fund or an ISA portfolio of shares? Low jeopardy, unlikely to lose a lot. Long time scales, unlikely to be a huge proportion of your overall wealth, but could be. And as for moving from low risk to high risk, well, essentially you're moving from cash to shares, which on the face of it would tick this box too. But remember that over the long term, cash is not necessarily low risk either, because you have the eroding effects of inflation. So personally, if you're in for the long term, I would say that a pension or share portfolio probably doesn't qualify for moving from low risk to high risk either. But in this scenario, then it doesn't satisfy any of these gambling conditions, possibly one if you consider cash is safer in the long term. Either way, 1 out of 4 would push you into the investing category. Final example, selling your house and putting it into a new business. Long timescales. Movement of risk from low to high, definitely. High proportion of your overall wealth, yes. And high jeopardy, yeah, probably. So that's 3 out of 4 of those criteria, definitely a gamble. But say you put 1/4 of your wealth into a new business. Long time scales again, the business was say a franchise or involved the purchase of assets, that if it all went wrong, you could easily sell those assets and recoup some of your spending. Well, now you can see that that's not so much of a gamble after all. So gambling versus investment, I think you probably knew there was a difference. Maybe you have different criteria than the ones discussed here. Maybe I've missed one, simply got it wrong. Put them in the comments below to add new ones to the ones I've already mentioned. We can always learn something new. Anyway, I hope you enjoyed this video. If you have, hit that subscribe button and the little notification and the thumbs up. I'm Anthony, and as always, we're talking money. I'll see you in the next video, but until then, bye for now.